How to anticipate a trend channel. Trend channels come and go. Trend channels are common, but often are only identifiable well after the time that they are useful. If you use the technique I'm about to show you, you can anticipate a trend channel. The process is to look for two peaks or two valleys to define the slope, and then copy the resulting line and attach it to the opposite side of the potential channel. Let me show you some examples. This is a look at the Dow Jones Industrial Average. You can see in the fall of last year, the market had been rising and had just come off a recent high. Identifying the slope between the May high and the August high defines the line that we are going to copy. We copy this line and attach it to the June low. What this does is forms a potential trend channel. And if the market declines to the lower boundary that we've just drawn, that would be the area we would anticipate to find support. If we take a look at how the market traded forward, you can see that the market did decline. It consolidated very near the bottom of our trend channel without actually reaching the line before rallying. The rally reached all the way back to the upper trend channel line and once again found resistance and turned lower. On the subsequent drop, the market found support exactly at the trend line and rocketed higher. Let's take a look at another chart. This time the NASDAQ futures. What we're looking for is for the market to define a slope. So between the November 2012 low and the June 2013 low, this defined the slope of a rise. Now, in order to use our anticipation process, we copy and move a parallel to the top of attached to this high. Now, what you'll see is as the market steps forward, it reaches up and finds resistance right at this projected line. Another interesting feature, when the market defines a slope, you can see when it fell short of hitting this channel line, came back and made this low and now came up to test this. Attaching a parallel to this low was a later point of support here. This is something that again, trend channels eventually break and break down. The price moves outside of trend channels. The idea is to be able to identify where they may come into play ahead of time so you can use it to your advantage. In this case, the break outside of the trend channel came back to test the top trend channel boundary before moving up to new highs. Looking at this breakout run, this is the NASDAQ, this time a 240-minute chart. You can see we define our slope along the highs, attach it to the lows. The market trades inside, eventually comes down, it finds support exactly at this anticipated trend channel line. Using these 2 points, once the market started pulling back, we define this line and you can see the market found support just about exactly at that line. Sometimes the channel lines are within market moves. And on a short-term basis, a lot of times these are only good for a single touch, because once they're known at this stage, then they're obvious. And a lot of times the most obvious things don't work out. This is the Euro futures, by the way. So as much as I've shown you with the trend channeling, I'll leave you with this. When evaluating potential trend channels, it is always a good idea to use a robust methodology as your primary method and your trend channel projections as secondary. Here's the NASDAQ chart that we looked at earlier. If I apply a volume at price profile to this chart, you can see the area of high volume. This is a primary method of finding support and resistance. Then we can move on to trend channeling, and you can see there are some areas where the trend channel moves through our known area of support. This can make this an attractive level both for the market to head into, but also for, as a trader, to take action from if the market does reach into this area. And there you have it. Just about a perfect touch to the intersection of the defined trend channel slope and the area of high volume, which was a primary method of finding support and resistance.